Okay, what's going on, guys? Courtney here. Good to speak to you guys again. I wanted to go over some little market understanding for you guys today. It's the beginning of the trading week. I know everybody is excited for the markets to open, so we start cashing out. And to do that, I would like to start you guys off with some essential tools. All right. With that being said, um, everyone has a different trading style. Some people like to look at stochastic, RSI. Some people like to do short-term trades. Some rather long-term. No one's trading style is law. Okay, I make these videos so hopefully you guys could pick up something that you like. Maybe my trading style is something that fits into your style. Whatever. Okay, hopefully it helps. But maybe it may not. So to tell you guys about the essentials, there's only three. Okay, one would be knowing how the market moves. Okay, once you learn a overview of how the market moves, it makes it easier to trade because you know the way they like to move. Okay, that goes with anything. You're driving a car. You know how fast it accelerates when you kick the pedal. Certain cars it picks up fast, sometimes it picks up slow. Stuff like that. Some brake hard, some brakes a little softer than others. All right, you know what you're dealing with. It's easier to profit off of it. Second being the moving averages. Moving averages is something that gives you another good overview of the trend that something is going, and the moving averages that I use are also good for entries and exits. And last but not least, definitely not least, is price rejection points. Okay, you heard me talk about it before. It's where you have a previous point where price was rejected, and then it goes back down there and rejects again. Which gives you good entries, nice places to see some good profit. So starting with the first thing I said would be knowing how the market moves. All right, so let me get my little cursor here. All right, so right here, as a lot of you may know, is a consolidation phase where the market is pretty flat, not much going on. So it's zigzagging here, and then around London session is where it decides to make its move. Okay, it bounces up, makes its move, goes straight through New York session, makes its move until the next Asian session, and boom. All right, flat lines again. All right, not until the next day New York session, it consolidates, boom, makes its move again to close out the week. This was last week. Okay, so what? And this is for all pairs. This was the New Zealand Japanese yen, but it goes for all pairs. Pretty much, there's a consolidation phase where price doesn't move much. It goes up a little bit, comes down between the high and the low, and then boom, shoots out to make its move. The most volatile periods of the day being London session and New York session. Those are the times where they usually make their move. Um, some people don't. They'll trade during Asian session. Not that there's not good money to make during Asian session, but a lot of points it is harder. It's you're waiting for that price to move all day, rather than queuing in on the big moves like London and New York session. And once again, that goes into your trading style. That's just not my style to wait around for Asian sessions. Sometimes it's a big hit, sometimes it's not. As you see here, actually this is a lot of movement for raw Asian session. Usually it's more like below 40, but you see 70 pips here and 50 pips here. This unusual. Okay, you see here, this is New York session 120 pips. Down here 90 pips, 99 pips. That's more like the moves where you can make some money. Now, moving on to further the moving averages, and in this case, these are exponential moving averages. They're a little different than the SMAs, a little different. But what I have here is the 50, the 200, and the 800. Now the 800, that's a very slow moving average. You know, it just so happens to be in the middle of this chart here, but a lot of times you're not going to see it because it's like way above or way below the price because it moves slow. The main ones to pay attention to are 50 and 200, which I call mommy and daddy. All right, price respects these EMAs. Why, I do not know, but what's important is that it works. Okay, for example, as you see here, price is bouncing off of the 200 EMA around London session, which is the point where it decides to make its move. Okay, it during Asian session, it comes to this low, goes up, comes back down towards that point. Okay, price, points of rejection also comes down again. Now, not only is this a point of rejection as previously visited here during Asian session, but it's bouncing off the 200. Okay, not quite the beginning of the London session yet. It goes up, comes down towards the beginning of the London session, which is 3 o'clock, and bounces. Not only is it another point of rejection, but it bounces off the 200 EMA again. And this is a key green light, major key, because not you have two different things. Not only do you have price rejection once, twice, but 3 times. You see it bouncing off the 200 EMA. The 50 EMA is right above it. It just crossed, signifying that price is going to go up. If it would have crossed the other way, usually is a clue that it's going to go the other way. But yeah, it crossed it upwards, so price is most likely going to go up, and in which it does. It makes its move, and which is a pretty strong move until it goes back into consolidation. Okay, so that's knowing the EMA and the EMA and how it moves, because I know that it's bouncing off of this EMA, I know that it's making this move, and I know that eventually it's going to consolidate. Okay, so there we go. Now into the last one, which I just touched on a little bit, but I'll go more into depth. I'll look at another pair here as we talk about price rejection. Okay, now price rejection. I went over this one right here. Going back a little bit. I went over this one right here as not only a bounce off of the moving average, but it was a price rejection point that you saw bounce off here. It came around the same price range here, and then again here. All right. Zooming back out, another point of price rejection, a different one that was, after consolidation. As you see, it goes the other way. This is, when market closed Friday, but it came up here. All right. This is a consolidation phase after its big move. Comes up here, consolidates, and then comes up here, which is within 12 pips of the last point. It didn't break the high of this, but it went towards it. Okay, this is price rejection, which is it's pretty much a range. I'm not looking for it to come to the same exact price, but I'm looking for it to go to around the same point. Okay, and also being that I've seen that it consolidated for a while, and also that this is the beginning of the New York session, I'm looking for a move, especially that being that it was flat during London session. Okay, now you know that New York and London session are the most volatile periods. The reason that this was pretty flat during this London session is because it made a huge move right here, as you can see. This is why knowing how the market moves is very important, because everybody waiting for London to move every day, not looking at the bigger picture. They're like, hey, why isn't London moving? It usually moves 100 pips, but it just moved, made a huge move here. Counting this, after bounce up here, it moved 200 pips. It moved 200 pips, so let it consolidate for a little bit, gather its marbles, and then it'll make another move. Okay, and in which it did make its move after going back to its point of rejection, and then it made 115 pip move. Okay, in which in this case this the 200 EMA would be that serves as a beautiful exit. You see it went past it and goes to the 800, which is the most slower one, and also another good boundary. But I use the 50 and the 200 as entries and exits, and as you see, the 200 was a good exit here. Moving over to the pound JPY, here's a good example of a price rejection. Again, here, this isn't through a long period of time. This is price rejection in the same session, from the end of Asian session to the beginning of London. You see, well, actually, I'm sorry, it started during the beginning of Asian and to the end of Asian, and then it comes down in the beginning of the London session. As you see here, this is a big Asians. This is a big range of Asian session here, as it was 130 pips. Okay, but it bounces off of the 50. Okay, which is usually a good entry, but I wouldn't enter it during Asian session. All right, bounces back off of the 200, comes back down. All right, and back to the same point of rejection. Now this is almost the same exact price, almost the same as within micro pips of the last point of rejection. Okay, goes up, comes back down for a third time, and then within like 2 or 3 pips of the last point of rejection, and then it shoots up. Okay, and the guys who know me know that all I need is my 20 pips. It's always good to have space, but all I need are 20 pips to secure my profit, and I'm out of this. So I'm out. I'm out within 30 a half hour, but I could have at least let it range out to the 200, because I know it's about to make its move, and that would be a good 80 pips. But as you see here, it makes its move, 130 pip move to be exact, and then goes into consolidation, and we know that we would know that it's going to consolidation because we know how the market moves. Okay, so hopefully this was a good video for you guys, realizing some more market understanding, gathering some essential tools to help you in your trading careers, guys. All I wanted is for you guys to pick up some tools that can help you guys trading life out. As always, you have some questions, hit me up, comment on the YouTube, share it within your groups. If you like the material, ask me about the other topics to go over. All right, and as always, guys, pivot ain't easy. Happy trading, guys.